Hi, Lynn Kenyon, Everything Montana Real Estate, in conjunction with Live in Montana Real Estate, our real estate company in Montana. We are here with Brenda Bridgeford. Brenda Bridgeford is veteran, 40 years
Yeah.
at Flying S, formerly First American Title. So she's got a lot of background on title, and my concern is that a lot of you don't even know what title insurance is, and you have to have title insurance when you buy something. Yeah, otherwise it's just way too risky. Lender requires it, so if you're getting a loan, that's absolute, and just anybody with anything on the ball is going to want title insurance. Explain just basically what is the title insurance?
So the title insurance is, we do a research on your property that you're purchasing, and we go back to patent to make sure that all the deeds from patent forward to the current date are all in line and are correct. We check for legal descriptions on these documents to make sure that they are correct, and if not, we find a way to get them fixed so that when you do get your deed of record and everything, you have good title, your description's right, and there's no problems within the back chain of the title.
So what would be a problem? What would you expect to see that you would correct?
Sometimes we will see that there's errors in the legal description, and somebody maybe, say back in 1960 they had title but they didn't deed out, or they deeded out incorrectly, or they died and there was no probate. So we try to, solve those problems, whether it's, contacting an attorney for the customer will contact to get a probate. We do see a few of that, those things once in a while, but for the most part, it's just a lot of research, but by the time we get to the end of the process, it's good to go for you. Yeah.
So we're going to look at Mickey Mouse title insurance,
Yeah.
just to give you an example of what you as a buyer are going to see this. You're going to get the new title commitment, they call it, and then the seller is going to pay for it in Montana.
Right.
Your lender will ask for an enhanced one possibly, but let's go through this and see
Sure.
what they would expend. And so we want you to understand, when you get handed this, it's a lot of legalese, and you know what you're looking at.
Mm-hmm. So initially, for Schedule A, that's the first page of your commitment that you'll be looking at, where it'll have the commitment date, which is the date that we have searched the records through. This is the date that the courthouse is updated to, so we can't, even though it might say February 8th, 2023 on here, and you're getting your commitment March 1st, the reason it's not dated March 1st is because we don't have the records up to that time yet. But those records will be updated at the time of closing. So everything will be searched to make sure that your close date is perfect with all the realm of any judgments, any new documents that would be of record. So that's number one, your commitment date. Number two is who we're insuring as an owner. This particular commitment has Minnie Mouse and Mickey Mouse. They purchased this property for $200,000, and their premium is $853, which is, like Lynn said, is normally paid by the seller, but that can also be negotiated. Sometimes you'll see that they'll want to split the costs, or somebody will pay for all of them. It just depends on what contract they've come up with.
Yeah, the buy-sell actually addresses it and
Yeah.
says that in Montana, the seller pays.
Yeah.
And that price is based on the selling price. So if this had been $2 million, that premium would have gone up.
Right. Then we got Part B of Section 2, that's where if you're getting a loan from a lender, that's the lender's information. The bank's name will be in here. The loan amount for this particular one is $150,000, and the premium would be $259. So that policy is paid for by the buyer because it benefits the buyer. And obviously, like Lynn said, so you have your seller paying the owner's insurance, the buyer's paying the lender's title insurance. At this point, the lender will also ask for endorsements, and if you see those on there, it'll have what endorsements we have that they're requesting and the fee for those. So that depends on what.
And what's an endorsement?
The endorsement is, so for our standard 3 endorsements are the 9-06, that's for restrictions and encroachments. The 22-06 is the location endorsement. So we're basically saying that the location and the address for this property is correct, of course. And then the environmental protection endorsement 8.1. So these are our standard 3. If there was a gas station on the property at one point, that all comes into play as to just show you that everything is still good on the title, but we're showing these endorsements that everything's good to go.
So they're paying for that. The lender's requiring
The
that.
lender definitely requires all three of those if they're doing an extended policy, which just gives them more coverage. And I don't usually see that they don't require those, hardly ever.
Perfect.
Yeah. So Part 3 on your Schedule A this is where it's going to show who currently owns the property in fee simple. So they own the surface rights, they own the house you're buying, and for this particular one, it was Donald Duck LLC. So that's the current owner, and because this is an LLC, we will require the LLC papers showing who is actually authorized to sell or sign, on behalf of that LLC. So we do require those papers, we get them and just clear.
Otherwise, somebody comes in and says, "Oh yeah, I'm Donald Duck LLC."
Right.
No, you're not.
Yeah.
You're Daffy,
Yeah.
and so they have to prove it.
Yeah. So then we've got number 5, which is your legal description, and that'll tell you exactly what your description is what you're buying. This particular one is Lot 1, Block 2, Neverland Edition. It'll say it's in the city of Great Falls, it's in Cascade County, Montana. If there's a plat number, that'll be on there, and we'll also, when you get your commitment, we'll give you a copy of your plat so that you can see, okay, oh wait, no, it should have been this lot instead of this lot. There might have been an error
Super helpful, yeah.
some way down the line.
Because not everything's surveyed. People say, "I want a survey." Well, not
Right.
everything's surveyed. A lot of these old ones are just buying a plat in town, so it's very easy to mix up. Legal descriptions are what bind the buy-sell. I personally have bought a property that the address was wrong.
Mm-hmm.
That was not a big deal. The address was not as big of a concern as the legal description. Is it the right lot, right section? Is this the right property? Because that's once you've bought that, this is what you're buying, this legal description.
Right.
This block, this lot, this range, township. So that's super important.
Right.
And that's all on here. So you want it, when you get yours, you want to check it against your buy-sell and look at that plat and make sure it's correct.
And this is some of the information we get from the buy-sell along with the owner's name. So if we were, say the owner's name was correct, but the legal description, say on the buy-sell, was incorrect, so we would know that, okay, we just pulled this owner's name, but they don't own Lot 1, Block 2, they own Lot 2, Block 1. So then we would call the realtor or the lender, whoever the transaction is from, and find that information and get the buy-sell corrected, do an addendum, so that we do have the correct information. And we don't see that happen very often.
No, I mean, your
Yeah.
lender doesn't they don't go look at this house with you and make
No.
sure it's right.
Right.
Your really realtor and you doing your
Yeah.
own due diligence is
Yeah.
highly advised.
Right. And this would be in the case of a refinance, but.
Okay.
So then we've got Schedule B, Part 2. I talked about the LLC papers. The requirements are on Schedule B, Part 2. And that's something that if you're reading this and you say, oh yeah, I've got to get the LLC docs to the company, we'll tell you what we're requiring. And you'll be able to read these. 1 through 5 are standard. They're just on every commitment. 6 is a borrower's affidavit that's signed at closing. And number 7 on this one it says, with respect to Donald Duck, a LLC, we required, so it's the operating agreement, it's any amendments thereto. And that lets us determine if, yes, that person who's sitting at the closing table is who's supposed to be signing this.
So those are standard.
Yeah.
You're going to see those in almost every commitment.
Yes. Schedule B Part 2 is your next. So we've got standard exceptions, which are on, again, all the commitments. So the ones that you want to be,
So don't worry about those.
yeah,
Because you're going to see those on everything. I mean, read them and understand them, but there's nothing nefarious, or it's just that it's what every commitment's going to show. And
Yes.
is there something to say about those standards that anybody
these
should
will
be
stay on
worried
your,
about?
yeah, they'll stay on your title policy
Forever,
when the commitment and the policy go into effect and your sale's finished. These will stay on your owner's policy.
What's an example of one?
Taxes or assessments which are not shown as an existing lien. So basically, if it's not recorded at the courthouse, if there's a mechanics lien out there and it's not recorded, I mean, if we don't have knowledge of it and it's,
You can't pay it off.
I mean, there's nothing there for us to look at, yeah.
Right. Okay.
Mining claims, but then we do not insure mining claims in Cascade County.
So take a look at those 1 through 7, and we'll show at the end what this looks like. We'll scan this so you can see better what Brenda's talking about here. Okay. So your special exceptions are the biggies.
Yes, so that will always start with your current taxes. So in this particular case, the 2023 taxes were 800. We'll show you that the first half, and this is an older one, so for 2022, they were $800 and they're paid. We'll put paid next to it. If they were delinquent, you would see delinquent next to that. But we will pay those off at closing, so you won't have to, when you get your title policy, the tax will be paid current through closing. It'll give you your parcel number if you need to look that up in, the treasurer, if you have questions. Sewer and the second one would be sewer and sanitation charges. That is also on every in-town or city commitment, because that's for sewer and sanitation charges that are assessed by the city. But then also they're paid though within the taxes, which is above. So those fees are within the taxes that you pay twice a year. Utility liens. So if your seller has a utility lien, we're going to check that. We check those on every sale. We get this information from the City of Great Falls Finance Office. So for instance, they have a $200 weed cleanup fee that they haven't paid, or their utilities are, in arrears. We'll contact them to get the payoff, and then we'll get those paid off at closing, which will be charged to your seller. So we'll take care of any liens that are on here that are to be paid off before the new buyer comes in.
So what you're doing, buyer, is you get this, you buy this property, you think you're all ready to go, you gave your down payment, you take the keys, and then all of a sudden you start getting bills from the city on weeds for the last guy. That's not right.
Yeah.
So that's why they're doing this. So everything's paid, you get a clean slate when you buy a property.
Yes. If there's a homeowners association, for instance, we have a lot of new subdivisions in our area right now, and a lot of them have homeowners associations, so they have certain fees. So we don't have the fees that they charge, but we do put that exception on here so that there's homeowner association that, and we'll give you a number for the homeowners association contact person, so you can find out what fees they're charged for what, and what their rules are. So, and then after we get out of the taxes and anything like a lien to that point that includes, taxes, we'll start on easements, and easements are, say, Great Falls Power Company, which is the old one. So Montana Power has an easement across your property. That'll show up on your commitment. And when you get your commitment, we always hyperlink the ones that you need to look at for sure.
By email.
Yeah, you get it by email. This one says easements for utilities granted to Castle Power, recorded and on book 800. So we'll hyperlink, that'll be a blue hyperlink, and then you can click that on and see exactly what it is.
So rural buyers, the big thing is uninsurable access.
Right.
And that's where, so I sell a lot of stuff rural, and in Montana we can get legally landlocked. In some states you can't, but we can here. So this is something the title company is going to uncover that if you are legally landlocked.
Right.
And if you are, the language you use is?
It'll say lack of access to subject property. Sometimes it's, they're like, well, we know we have good roads even though we don't have insurable access. The neighbors promised that they'd let us go, but that's at the discretion of the buyer.
Yep. And so lack of access. You see lack of access, that should be an enormous flag. You need to start talking to your realtor, your attorney, and everybody else. Because that's a big deal. It means that you don't have a legal right to go to your property, and it's different than physical access.
Right. But
it's something, and that's where that's going to uncover this.
And we've had people that have come in and we've had the lack of access on their commitments, and they're like, okay, well, we don't want to buy it that way. We want to correct this before we buy it because we don't want to have problems in the future. So they'll, we'll find the landowners, or they will, and they'll go to each individual to get an easement from, say, the county road past maybe 2 or 3 parcels of land to get to their property. And then that way once we review those documents and they're granted by the correct people, then we can ensure access. So it's something that, some areas we can't do that, unfortunately, but there
Yeah,
are.
sometimes Brad and I went to 17 landowners in Wolf Creek
Wow.
and got them all to do a mutual easement, yeah.
Yeah.
And, but it was, the one last guy wouldn't do it, and so the whole thing fell apart.
Oh,
So
no.
everybody has to agree.
Everybody
So,
has to sign
yeah,
in.
so that's just something to be very, very aware of. Lack of access, start asking questions.
Yes. We're also going to have your covenants, conditions, and restrictions. And basically what these are is, you bought this lot in a subdivision, and maybe you have to be 10 feet from the curb line, or you can't have dogs, you can't have horses, you can have 3 cats, you have to have matching outside paint to this, to the roof or something. So
just
that's
rules, yeah.
basically what that is. And
Lots of rules.
maybe you can't have a mobile home on this vacant lot you're buying. So you need to look at those. If that's your plan, it won't work with this property unless you can get something again signed by a majority of those landowners within the subdivision that say, yeah, let them do it.
So, and those covenants can also get updated. So you may have the first initial, you want to make sure you have all of them.
Right, and we'll show the amendments, if there's any amendments. Like, sometimes they originally start, say, in 1960, and then as things change throughout the years, they'll do amendments. You'll have access to all those amendments per your commitment, which again is the blue hyperlink. Click them on and it'll tell you what's changed or what's been deleted or whatever. Homesteads. So we've got homesteads that are filed usually with your mortgage and your deed, and that's signed at the closing table. So what that does is it protects you for, at this point in time, it's $350,000 for liens against, like if someone sues you, you've got $350,000 worth of equity
That they
protected.
can't touch, yeah.
They've got it protected within that. So it's just something we do standard here at Flying S. We will file a homestead for you and have you signed at the closing table. Any mortgages that are from the previous owner, if you get this, oh my God, they owe $300,000. So you're paying $350 with your money, or if they don't have enough to pay it off from the sale, then they come up with the rest. So that mortgage you see on your title commitment will not be there at the time of policy. So we will have that paid off at the time.
Yeah, and I mean, they could have had a $350,000 mortgage 20 years ago.
Right.
So that doesn't get updated on your commitment, but when they go to close this, they get an update on what's owed. So, but if it's a huge discrepancy, you probably want
Right.
to, do these guys have enough so you're buying this house, maybe the seller, oh, I forgot I took out a second mortgage. So do they have enough to make up the difference and pay off the loans against the property?
And we don't know what the balance of the loan is when we do our title research. And that's when, like Lynn said, the closing office, the escrow officer, will get a payoff from this lender, and then they know exactly how much to pay off on the date that you're closing. And so that's paid off with the funds that the seller receives. If there's any judgment, say the seller is divorced and they have child support, that also has to be brought current, or an affidavit signed by the ex-spouse who's receiving the child support stating that the other spouse is either current through this date or that it's paid off. Otherwise, that would follow the chain of, follow your property, and we don't want that to happen. So
It's interesting that shows up.
any judgments, yeah.
Any judgments against you can't run away from them. They get recorded at the courthouse
Yeah.
and then against your property typically.
Right. And any judgment so once you buy the property, if you end up getting a judgment against yourself, whether it's a federal tax lien, a state lien, child support, maintenance for a spouse because you're divorced, those will attach to any real property that you have from that date forward. So
pay them off.
yeah, talked about the lack of access.
And those are the big ones.
Those are
I
the big
think.
ones, yeah.
And I anything, when I get a commitment and I'm like, I have one right now, is like, oh my gosh, it's 5 pages long. It's got easement after easement.
Right.
And forester, and if you have a question, you want to talk to the title company, you want to talk to your realtor, and it may go as far as you need to talk to an attorney. I mean, some of
Yeah.
these get that involved, and they do the best they can. And our next step here today with Brenda, we're going to go into their plant, which is how she does search. But if you have a question, it's a big deal. you're assuming everything on this commitment. So if you don't understand it, you need to understand it before you sign on the dotted line and close the
Right.
sale. Because
And we're
you're
happy to
inheriting
answer
it.
any questions, obviously, yes.
Super helpful. These guys are great.
Yeah.
So that's awesome. Thank you very much.
Yeah.
I appreciate walking through this. Flying S title, Lynn Kenyon, Live in Montana Real Estate, and Everything Montana. Our next step is we're going to go on this plant, and then you can see what they're doing, what her day-to-day is, and what you're paying for when you pay as a seller and a buyer for title insurance. So thank you for joining us.
Thanks.
Okay, now